Good afternoon. My name is John Stephenson. Today I'd like to talk to you about BRICs. Not the kind in your house, but the kind that have been marketed to you as investors. Since 2003, when Goldman Sachs coined the term BRICs, which stands for Brazil, Russia, India, and China, they've been all the rage. And after the economic collapse of 2008, who can blame people for looking for areas of the world where growth is going to be strong? And while I clearly believe that China will be driving the bus economically going forward, India will be a strong star, Brazil will clearly come out ahead, not all BRICs are created equally. The one standout is Russia. Why? Well, first of all, Russia practices a form of gangster capitalism. With the change in leadership under Yeltsin, things were sold off, state enterprises were harvested out to the highest bidder or the one who had the most political connections. Now today, a different regime is in Moscow, and they're aggressively nationalizing assets. Anyone who steps out of line politically is thrown in jail and their assets taken away. We've seen it in the potash business. We've seen it with Royal Dutch Shell and their Sakhalin asset, an offshore natural gas facility that was basically stripped from them. We've seen it with BHP and also BP. We've seen it through all of these changes. And why? Well, because Russians like this new re-centralized Russia. But as for foreign investors, they're scared to death. The one thing that has masked over the economic problems in Russia has been rising oil prices. But the infrastructure in Russia is aging, and aging badly. By some estimates, 50% of the gas that goes into Gazprom, the largest pipeline company in the world, doesn't make it to its end destination. It leaks out through the pipeline at various points. Now, with oil prices down, Russia's economy has tumbled. The stock market has fallen off the charts, and foreign investors are abandoning Russia in droves. It is a have and have-not society, and I think investors who are looking at investments in the emerging market world need to look at the funds that truly represent where growth is coming globally, not where growth has been and where fancy marketing has been the order of the day. Thank you.